welcome. It's Michael Murray with Benzinga here, joined today by John Love, President and CEO at USCF Investments. John, great to have you with us. How are you?
Very good. Thank you. Great to be with you. Thanks.
Pleasure to have you here and a pleasure to be talking to the USCF team again. USCF was founded in 2006 to be an innovator in the ETF space. Is innovation still your guiding principle at USCF?
Yeah, absolutely it is. There are a plethora of ETFs and investment products that investors have to choose from. And it doesn't make a lot of sense for a firm like us to introduce Me Too products where we're just offering you something that you can get that somebody already has a good fund built for that. So we try to come up with something that doesn't exist in the marketplace or something that's a better take on an existing asset and offer that to investors. And that's really been our key to success over many, many years.
Phenomenal. Now, John, what are the unique difficulties with managing the commodities funds that are a part of USCF?
Well, nothing to complain about, but there are some things we do that make life easier for investors. If you want to invest in commodities as an individual investor, that typically means investing in futures. We do that for you. There's two things, at least two things unique to futures versus equities that are a bit challenging for the average investor. Even if you know what you're doing, it's a hassle. And those two things are one, you buy futures on margin. And when you're doing this in a brokerage account, it's kind of a game of where'd my cash go? As futures go down, you get margin calls. As they go up, you get margin back. But you have to manage that process, and you have to make sure you have enough cash in your account to deal with that. The other thing that you have to do with futures is you have to roll them forward. Futures contracts expire. It's not like an equity where you have a perpetual investment that you can buy and not worry about once you have it. You have to make sure you roll that future forward. Otherwise, you find yourself the proud owner of 1,000 barrels of crude oil. So you don't want to have that happen. And in an ETF, we do those things for you, making life hopefully much easier.
Absolutely. And John, why should investors consider commodities right now in this time and place where we are in the market?
Well, for one, we think there's always a place for commodities in a strategic asset allocation. They are not correlated with stocks and bonds, which is the key to diversification, something very important in portfolios. They have long run returns and volatility similar to equities, though. So there's really a strong case to always have commodities. Right now, though, is particularly interesting just because of what's going on in the world and what we've seen over the last few years. Unfortunately, we have a lot of disruptions, a lot of geopolitical tensions, and those kind of things tend to be good for commodities, whereas equities move up when everything is good. Commodities rise. They rise when things are good, when the market cycle is good, when the industrial cycle is good, and people are buying a lot of commodities to make things. But they also rise when it's a challenge to get the underlying components of all the things that we produce. And so when you have the kind of things that are happening in the world today, you really face a challenge where something might run short, and that shortage will create some upsides for commodities. So, unfortunately, we're looking at a more volatile decade. We're also looking at a decade where interest rates are higher and inflation is higher. Commodities are strongly correlated to inflation. They also earn money, commodity futures, from the collateral that is held as margin for the futures. So you're actually earning short-term interest rates generally that are a tailwind to the commodity holding itself.
Understood. Now, John, what sort of things should investors looking to get into commodities be aware of that are unique to the asset class as opposed to just stocks, for example?
Well, as I mentioned before, stocks, you have to basically you're able to buy a stock and kind of forget about it. You might check on it every quarter or once in a while, but you can buy a stock and not think about it. With commodities, because commodities expire and you have to roll them forward. There are two forces called contango and backwardation that investors should look up. It's a bit complicated, but it basically is, you can think of it like the term premium on interest rates. You can also think of it as a headwind or a tailwind to your commodity return. When futures in further out months are more expensive than the current month, that's something called contango. And that's kind of a headwind to your return because you're rolling up to a higher priced contract that is then going to come down to spot. The opposite exists when commodities in the future are cheaper than the current spot price or the earlier months in the curve. That's a phenomena called backwardation, and that's a tailwind to your return. So it's something that investors should be familiar with. It's not something to be afraid of, but it is a difference in terms of looking at commodities versus equities.
Got it. Let's talk undervaluation for a minute here as we start to close. In your opinion, what do you feel is the most undervalued commodity right now in the markets?
We're really looking at a couple of things. One, industrial metals, particularly the battery metals. Very specifically, copper is looking good to us. There has been an underinvestment in copper over the last decade, and so, actually, even several decades, and it takes a long time to bring new copper supply into the market. With the increased demand for copper in the electrification of our grid and in cars and all these other things, there's a strong demand for copper that may rise, may double in the next 15, 20 years. And yet we don't have the supply to meet that demand. And we think that's happening now. So we think copper is well positioned. And so are the industrial metals. We launched a fund earlier this year. ZSB is the ticker. And that is very specifically focused on the metals that go into batteries and power grids and things like that. And then finally, we think there's probably some good upside for energy, just with the tensions in the world and the situation with inflation and all sorts of factors. We think we're fairly bullish on energy.
Understood. John, as we close, what's next for USCF moving into the future? What should we be paying attention to about the firm?
Well, I think right now we're hoping to tell the story about our funds. We've launched a number of great products this year. As I mentioned, ZSB. We also launched ZSC, which is the first sustainable commodity fund looking to the commodities that will be important, not just today, but in the new economy that's developing over this decade and in the decades to come. So we'll be talking about that a lot, and we'll continue to talk about commodities in general, and hopefully educate investors about the benefits of holding commodities in their portfolios.
Wonderful. John, cannot thank you enough for taking time out of your day here on a Friday to talk about the markets, but more specifically, what USCF is doing. And John Love, President and CEO at USCF, thank you very much for being with us.
Thank you very much.